Hello, ladies and gentlemen. Well, the Senate yesterday passed another massive stimulus bill to refund the Paycheck Protection Program. We did a video on that, but I know the thing that the average person is probably a lot more concerned with hearing about is payments to individuals, much like the $1,200 checks that many people have already received and some people, including myself, are still waiting on. We have a video about that, problems and fixes with that. If you want to check that out, I'll put that on the end of this video. But anyway, there is another stimulus bill in the works, okay? Trump, Pelosi, Schumer, McConnell, basically all the Democrats and Republicans, they all seem to agree that another stimulus bill is needed and it's going to be massive. Schumer said yesterday on the floor of the Senate that it should be similar in size to the CARES Act. The CARES Act cost $2 trillion. So we can be sure that there is another massive stimulus package coming, and there are a variety of competing proposals to be included in this bill, okay? And in this video, we're going to take a look at all of these proposals. Some of them will put money in your pocket, all right? So stay tuned. Now, first up, we have $2,000 per month payments. Now, this was proposed by two Democrats in the House, and the proposal is basically to give every American $2,000 in free money per month until this crisis is over, basically until employment returns to pre-Rona levels. Now, I do have a video on my channel that explains this in detail, give my thoughts and criticisms of this, so you can check that out if you want to learn more about it. But this is basically pretty similar to the $1,200 checks, except that it is every month, okay, until the crisis is over. There are some differences as well. For example, dependents would be eligible for this. That's a big complaint people have had. If you're claimed as a dependent on someone else's tax return, you're not eligible for the $1,200 checks. Well, with this, you would be eligible. The income brackets are much higher. That's a little bit of a criticism because you're basically giving people with a lot of money checks for nothing. That was one of my criticisms of it. Not everyone agreed with that though. But anyway, yeah, if you want to learn more about this one, check out the video on my channel. Let's move on to the next one. Federal government to cover 80% of wages. Now, this is a proposal from the Republican Senator Josh Hawley, and he wrote an opinion piece in the Washington Post to explain it. And I'll just read what he says. Beginning immediately, the federal government should cover 80% of wages for workers at any U.S. business up to the national median wage until this emergency is over. Further, it should offer businesses a bonus for rehiring workers laid off over the past month. The goal must be to get unemployment down now, to secure American workers and their families, and to help businesses get ready to restart as soon as possible. But you know, this 80% thing sounds very familiar. Ooh. What's this? An article from March 20th. UK government to pay 80% of wages. Well, Hawley released his article on April 8th. Did he just copy a policy from the UK? Well, I guess if it's a policy that works, it doesn't really matter. You can't really copyright a political policy and not allow anyone to use it. But it is just kind of funny how it seems to be just the exact policy from the UK lifted into his proposal. Anyway, on to the next one. The Paycheck Security Act. Now, this is a similar proposal to Hawley's from several Democratic senators, including Bernie Sanders, and it would cover paychecks up to $90,000 per year for companies. But those companies must show a drop in revenues of at least 20% due to the Rona situation. And this has been a criticism of some of those companies that applied for the Paycheck Protection Program. They had to self-assess themselves, and some companies perhaps slipped through the net that really didn't need it, okay? So this, requires some evidence of a 20% drop in revenues. All right, so those are three proposals to do with people's wages. There's going to be another proposal that we're going to talk about that will put several $100s per month extra in the average man's wallet. And if you like the sound of that, hit the like button, okay, for the YouTube algorithm. That would mean a lot to me. And we'll talk about that at the end of the video, so do stay tuned. But first of all, there's a couple of other things that have been proposed for this bill. Funding for state and local governments. Now, the Democrats wanted this in the interim bill that passed the Senate yesterday. They didn't get that. Republicans blocked it, but Trump did promise in a tweet that he would include it in the next bill, okay? So that seemed good enough for the Democrats, so that's apparently what they're doing. So what exactly is it? Well, US states and localities have experienced a drop in tax revenues because less people are working because of the whole situation, okay? So basically it's funding to help bolster these states' tax revenues to make up for that lost revenue. And Governor Cuomo of New York has proposed $500 billion across all the states, okay? That's $10 billion a state, although it probably wouldn't be, allocated like that. It would be depending on a state's GDP. But that's quite a big figure. I don't know if it'll be that much. Maybe he's just highballing and expects to be negotiated down. But let's actually go back to that Trump tweet, because there were several other things mentioned in that tweet. Another one of those was infrastructure. So Trump has been talking about infrastructure spending since the election. In this fact sheet from the White House published in 2018, it outlines what Trump is calling for. $200 billion in federal funds to spur at least $1.5 trillion in infrastructure investments with partners at the state, local, tribal, and private level. So it would be a portion of federal funds as grants to entice private companies to then spend their own money to do infrastructure spending. And he would be spending $200 billion and getting $1.5 trillion in total infrastructure spending, or that's what he proposed. Well, that was then, and this is now. Trump recently tweeted out, "With interest rates for the United States being at zero, this is the time to do our decades-long-awaited infrastructure bill. It should be very big and bold, $2 trillion, and be focused solely on jobs and rebuilding the once great infrastructure of our country, phase 4. And this was described as a tweet that makes Democrats look bad. So $2 trillion, I mean, that's massive. That's the size of the CARES Act in total, without, even putting in all the other stuff. I don't think it's going to be $2 trillion, but it does seem that they want to have some massive infrastructure spending in this. What will that infrastructure spending would be on? Well, a lot of, Pelosi seems to agree with Trump that they need to spend on bridges, tunnels, water, broadband infrastructure, etc. Trump also has the condition that he wants a portion of it to go to rural America. I'm guessing because that's where his base is. And also, rural areas are often left behind compared to the big cities. All right, let's move on to the next thing. Incentives for restaurants, entertainment, and sports. Now, Trump wants to bring back the full business deduction for meals. Okay, so right now, if a company takes someone out for a meal, a client, for example, takes them to lunch, the company can only deduct 50% of that from their taxes. It used to be 100% in the past, but it's been slowly whittled down, and at the moment it's 50%. In addition to that, companies cannot deduct entertainment expenses anymore. So taking a client to the golf course, a company team building trip, you cannot deduct that at all anymore. And that was actually signed away by Trump in the 2017 Tax Cuts and Jobs Act. It was Trump who canceled that himself. So that ski trip that my company took, we really weren't able to deduct much of that at all. Okay, it wasn't really a tax deduction for us. A few things were, because we spent some time filming and stuff, so stuff associated with that, but a lot of it wasn't tax deductible. Now, Trump feels that to bring back these two deductions, it would encourage companies to do more spending in these areas, because obviously they're getting a tax deduction for that, and so that would stimulate the economy, because they would be spending at restaurants and at entertainment places such as golf courses and all sorts of different things like that. So it is kind of common sense that it probably would stimulate the economy, but obviously you're going to lose out on tax revenues in the process. And finally, we have the thing that would put several $100s into the average man's bank account, and that is the payroll tax cut. So if you don't know, right now there is a 15.3% tax on wages. 7.65% of that is paid by the employee. So that's where you see on your pay slip, Social Security taxes, Medicare, that kind of stuff. It's all included in that. And the other 7.65% is paid by the employer on top of your wages. So if you earn 40 grand a year, the employer is paying another 7% or so on top of that. So it actually costs them more money to employ you than they actually pay you. Now, Trump has proposed a payroll tax cut. Now, for the average person earning 50 grand a year, if you cut that payroll tax, so they'd be getting more than 7% added to their wages, they would get about $318 extra each month. So it really would put a few $100s extra into the average man's wallet. Now, Trump has proposed suspending the payroll tax until the end of the year. And the Tax Foundation estimate that this would cost $950 billion if the entire payroll tax, both employer and employee sections, were suspended from April 1st until December 31st, the end of the year. Okay, so that's obviously a huge amount of money, but you don't actually have to cut it fully. Okay, you don't have to suspend the entire tax. You could maybe halve it, or you could cut one side, etc. And there are arguments for doing both. So if you cut just the employer side, it gives businesses greater liquidity, gives them extra funds, which might help some companies that otherwise would be going bust to stay afloat. Okay, 7% on top of all their payroll costs given back to them. That would definitely give them more cash on the books to help them survive this time. But it wouldn't help the average person, it would help companies. Now, if you cut the employee side, that puts more money in the average man's pocket, and that would in turn stimulate the economy, because they would probably take that money out and they would go and spend it on things at businesses, and then stimulate businesses that way. So personally, I would be in favor more of cutting the employee side rather than the employer side, even though I'm an employer and I would benefit from either, I think the employee side would be better. Now, there is another criticism of this though, in that it does help the average person, but it wouldn't help retirees because they don't pay these taxes, because this is a tax on payroll, okay? So it's only for people with salaried jobs, retiree income, investment income, that kind of stuff. They wouldn't benefit from this at all. So, you know, that's kind of the deal with that, but I think it would be a very positive thing overall. So guys, those are all the proposals for this new massive stimulus bill, which is probably going to be within, you know, between $1 and $2 trillion. Helicopter money again, created out of thin air. We're bankrupting the Fed together. What are your thoughts on this? You know, which one is your favorite? I personally like the sound of the payroll tax most, but please leave your comments below. Let us know. And if you do get a tax cut and you have some money that you're wondering what to do with, it's a great time to invest in the stock market. We do have a deal with Webull where you can get 2 free stocks for signing up and funding an account. So just take a look at that. The link is below. Obviously, if you're short of cash, then I don't recommend going and investing in stocks at this time. But if you are someone with a little bit of money lying around and you do have a little bit of an interest in it, it's a great deal for you guys to check out. As always, please subscribe if you're new, and we'll see you next time. Bye-bye.